Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Friday, the 19th of June, 2020. What an interesting day. You know, I went today for an estimate on my haircut. It was too much, so I'll wait for them to come down in their price again. But to make a long story short in here, the markets took off again this morning, and you know, for the whole week we've been watching markets that no matter what the news is, bearish news ends up bullish, bullish news ends up bullish. People are blaming the retail trader, these Robin Hood traders as they like to call them. I say nonsense. The volume they do just isn't that volume. I still think it's algorithms that do most of the trade, and you know, it's fun to talk about these individual armchair traders that have never seen a big correction, and I get that. But what really set the market today was COVID, and I've been mentioning it to you over and over that the problem is we're watching record number of cases in Florida. The beds are filling, so they're going to have some problems. Texas, same thing. Arizona, same thing. The Carolinas, picking up again. People aren't social distancing, and if they don't social distance, this picks up momentum. Now what happens? Apple closed 11 stores. When that news hit the newswire, 11 stores, they have thousands of stores, so we're talking 11 stores. The market reversed course like that and came on down. Now the daily chart action is a lot worse looking for the moment than the action on the weeklies. My advice would be to look on the daily charts on those markets that had outside days to the downside. You don't want to see those days, today's high, taken out on those. Otherwise, this is a non-event. I think the market will then go back, try to rally. As long as those highs hold for the Monday and Tuesday, those 2 days that I care about, then maybe something else is brewing. So let's go right to the charts. On the monthly area chart of the S&P, you've come off from 25.69.75, the big break low. You're back up to 31.61.25, let's call it. And this is on a closing basis. You're still in the month of June. The month's not over. The highest monthly close we had was there at 32.31. You're within 70 points on a closing basis of getting up there. That's not bearish action, not on the monthly. On the weekly chart, it's a little different. I keep pointing out in the daily reviews for you that we've had this pattern that we haven't seen any of these weeks take out a previous week's low. You see that? When you get a correction, you haven't taken out a prior low. Now what I'm studying, the number now I care about is 30.34.75. Now that's 80 points away in round figures, but if that happened without taking out 31.86.75 as a chartist, I would start saying maybe this is where the reaction for this leg is running out because you've gone straight up. There's no way to say you haven't just made a phenomenal run, something I've never seen, and maybe it's correction time. I don't know what a correction means. I'm not trying to pinpoint that for you. Certainly if you got down, maybe the 18-week average of closes is a number. I don't know. When I come over here to the weekly bar chart and we look at it, you're still running to the upside. And for the week, you were up 126 points. So even with today's sell-off, a pretty solid showing for the week. And the market's in an uptrend with a pattern of higher lows, higher highs. I'm not convinced I know what I'm saying right here. This was my bothering point, and let me show you what I mean. If we come to this week, we had an outside week down. Remember what I've tried to explain. Outside weeks are important. If you take out the high of an outside week, it's a trap, and because it was down to be a trap for the bears, let's get to it. It did it. What you don't want to get back under then is that week's low. I've seen them where it goes for both, and it shouldn't take that out within 2 weeks after it. Market instead making its run to the upside, as you can see. That was my signal, and I know I said it to traders, be careful, this market's done something, it's caught a group here. When we come into the chart on moving averages, if you get a correction, there's 2 points of support. The 100 right here, which is 29.02 in the 18-week. Now let me tell you what I didn't like on the chart. As you were going up on the chart, I want you to look where the 18-week average is compared to the 100. You get a bearish crossover on this. That's not a bullish sign. And I realized the market came back this week. It is still not a bullish sign. If this market were to get a close under 28.8050, I think moving average analysts would embrace the bearishness of the market, then looking for a challenge of the potential for the 200 week. It's got a lot of work to do that. I'm the first to tell you that. And no, I'm not telling you on this chart to go short. You're not hearing that from me at all. I'm giving you the what if scenarios. At this point, you still have the swing line up, the bias is up. The Bollinger Band is going to come racing at this market. Now you can see how it's dropping where the bottom band isn't doing that. So we're going to start seeing resistance points, and they're going to start dropping on you into the area where you start getting under these prior lows. So it's going to make it harder, in my opinion, to get up to that prior low. Now what could change everything? You know, anytime that we're going to hear that there's a treatment and or a cure, ideally a vaccine for COVID-19, get the SpaceX launch pad ready, because this market will roar on you. I don't see that happening from all I'm reading. I'm not a doctor. I'm not in that field, but I read like a madman. And while all these tests are going on, there's a long way to go before we hear anything. Maybe the end of the summer we'll hear something. It would be certainly great. And that could counter the impact of the negatives that we're hearing, because all of a sudden, go get a vaccine. All these cases are going to go away. A treatment, okay, you get it. It's like the flu. You're going to be fine. You're not going to die. Here's the treatment. You know what I'm getting at, and that's very important. When we come over to the S&P and the slow stochastic, momentum up. So on the weekly charts, we still have the trend, as I'll call it, to the upside. You're over these numbers. I don't like that the 18-week got under the 100. It could flip-flop back over it and get me excited, then a bullish crossover. It's bothersome. When I come to the NASDAQ, what can you say? It's still strong as can be. You have a market with higher lows, higher highs, momentum up. If the market continues up, 10,388, the upper Bollinger Band, next resistance. You've already proven you can make the higher highs. You've already proven that the tech companies are the things to own. The question is the valuation of them. In the Dow, the trend is still up here. You have a pattern of higher lows. Again, you had that outside week. Here it is. If you take it out, the first objective is the closest main moving average. Didn't quite hit it there. Now you hit it. So that's all that it owed. Now, who knows where it goes? The market pulling back, fighting a battle, and I think you'd agree, at the green line, which is the 100-day average of closes. If you slip from here, the next support's the 18 and the 200. What else is going on? I always look at these things. This 18-week average is dropping away in this market. If it gets under the 200 and prices were to close under both, I'm telling you, the moving average analysts, they'll have a field day with it. They'll say that was it, the game is over. That's what I think they'd say. Do I know? You know, everybody's got a different thing. In the Russell, I think the Russell's got a hard time here. This market hit the 100-day average. It didn't do well. The daily charts are absolutely on the down brink as I see them. First support's 1340. You don't break the bullish pattern until you get back under these lows right through here. And here too, you had that reversal pattern, and that's why I keep showing you this. You know, there's little tricks that you start watching. I wish I could tell you everything works the same all the time. I can tell you my analysis on it will be the same all the time. Take out that high. I'm going to look for the closest moving average to be hit. And you did it. Now, anything after that is gravy, and that's what you've done. Do I honestly think the swing line, even though I've marked it as pointing with higher lows, higher highs? No, and I created it. And the reason is, any way I look at it, that low got under that one. But when I get that move, I just look at it and I put it on for people to understand. In the bonds, you're on the verge potentially of getting on the weekly chart a buy signal. You've had this pattern where the market has corrected since here all the way down on a weekly chart into the 18-week average of closes. And in the process of doing that, you've managed to keep lower highs all the way through, going back to March. If you take out 179.31, you reverse the pattern. You get higher lows, higher high, putting into play the potential of wherever that Bollinger Band is. Maybe it can get there. You'd have to break through these lows after that happened to prove that the market is just a false breakout. I'm looking at that with excitement. 10-year note, same thing, or is it? Not quite. Take a look here. You could have the higher low, higher high. Now let's go to this chart. I can't get that. I can negate the downtrend by getting through 139.17 and end this pattern. And by the way, since this broke down, the lower highs, lower lows, you finally did hit that 18-week average of close. I meant to say week. Why is that so important? The way I teach charting in my charting course, if you haven't taken the course, and a lot of you have, it's $179.95, 6 hours of videos with charting software. You see what I did in the past. You do the same thing. I teach you step by step all this, and then you also get some of the research. It's a pretty good deal. But momentum is up. Remember, we don't consider and the slow stochastics on weekly charts overbought or oversold. It's either up, down, or sideways. Still pointing up. Get over 139.17, you certainly, on my work, end this downtrend pattern that you've had. I am not saying, like it did in bonds, that it would kick off a buy in that. In the dollar index, for my play, the way I look at weekly charts, you've hit all my downside targets. You first hit the 100-week average. Then you went to the lower Bollinger Band. You know what I'm going to say. When you hit the Bollinger Band, be it on a weekly, daily, I don't care the chart. The first time you hit it, it's often where professional money steps out of the market. It is not where they're going long to get a bounce. No, don't fall into that trap. It's where they'll take money off the table. Do they have to take it all off the table? Everybody trades different. Now you're getting your bounce. Where's the resistance? Back up through here at the 99.10 level. It's quite a ways up, but that's it. COVID cases break out a lot more. Which currency do you want to own compared to everything? It might be the dollar, might not. If Europe doesn't get the cases, you might say, well, the US has got a problem. Maybe it's not the dollar I want to own. In the euro currency, it's just a flip-flop of the dollar. You got up to your 100-day and your Bollinger Band. I think the pros got out here, right there. I don't think they waited for that. Market's under it. We'll see. Support in this market all the way back at 110. That's where I think the market's interesting. In the Canadian dollar, still in an uptrend. The market's got the higher lows, higher highs. You tell me the moving average that stopped that rally. The 100-day. You're always looking to see moving averages above the market that the trade people might focus on, and where you're at with Bollinger Bands and trying to put together support and resistance. Nothing goes to the moon. Don't get me wrong, there could be something that does. You know, they go, Tesla's gone to the moon, right? Amazon's gone to the moon. I can go on, but those are over time. That's a different type of investment than trading in the futures markets. In the Japanese yen, this market's in a whipsaw. You came down, found your support at the 100-day, came back through these numbers. Now, if we take a look, that was your downtrend. Lower highs, get through that, you got your lower low, and it all happened at one time with momentum down. Now the market's come back and the momentum is turned up. The market's got upside bias. It's not trending. It has the higher high, lower low pattern there. Bitcoin, just in a broad sideways action. It has the upside bias as it's over the 18-week average of closes. It would break the pattern of higher lows, higher highs that set itself up all the way back here on weekly charts. Right back here. You realize that's under $5,000, about $4,500, and the market just hit $10,565. I warned traders back here. So the problem you're going to have is in May, they're going to go into the halving process, which means all the computer power is cut in half to get the same coin. So you're going to have less coins coming to the market for the same amount of energy that it takes to run and develop one. And that has helped get that because you've cut supply on the market. The diehards love less supply. In Brent versus WTI. So we have an economy in the world that's come back to life. We have OPEC that's done a job of cutting production. They're now reining in the people that are not producing. The fly in the ointment is if you get another outbreak of COVID that's really, really serious in the U.S. for our WTI crude. Right now, Brent's doing better because Asia's still fine. Korea seems to be under control. China, I don't know what's real there, but they say that they are getting it under control. And in Europe, you know, there's going to be outbreaks like we get here. If we're getting them, they're going to get them. It's going to work the same. And they've opened their borders. I believe that's opening right now. That's an invitation for more problems. But as you can see, the overall bias is still to the downside. Let's take a look, though, at the difference here. Here's Brent, and the trend up over the 18-week average, momentum up. Until it runs out of steam, it hasn't. If it wanted to extend, 53.87, and that number will fall next week because it's going to chase price. So it came from 57.09, then from 59.56. So it's falling $2.50 to $3 on average. It wouldn't surprise me if we get another break closer to the 50 level by Monday. We'll see what happens when the market reopens. In WTI, the trend turned up. And you have this week an outside week up. Uh-oh. I get outside weeks, my signal is this market better not take out 34.36. That's the low of this week, either the coming week or the week after. If it does, this is a false breakout signal. As long as it isn't, c'est la vie. We see the resistance. Trend up. Obviously, you've got to throw out this 40.32. You'll probably never see a negative number like that. At least I doubt that I will. I think the exchanges and all will not allow that to happen again. In the Rebop gasoline, still in a bull trend. We have July 4th coming. People are going to drive. This is July 19th. You honestly think there's not demand out there that the gas station owner's saying, hey, fill me up again. I got people on the road. Look in your own area. Are people driving? I'm telling you they are. Chicago's back to rush hours. Today I had to go to the dentist, so I was taking, on the way there, an Uber. On the way back, I took a cab, and, you know, you're all masked up and everything, and I'm asking them, what's it like? The Uber said it's just about back to normal for him. The cabbie said not quite yet, but very close. He expects within 2 weeks it'll be back to what he'd call normal. So this is just Chicago, but New York's reopening, so you're watching it. That's good for that market. Now you have to figure out what do you do with all of it. And that's where I try to help. You know, one of the things I do in the morning is I put out a morning subscriber video for my paid subscribers. It is not free. It's a 20-minute video, folks, where I review 40 charts giving you, first, what's happened in Asia, Europe, the daily reports that are coming out starting at 6 a.m. I start recording about 5:40 in the morning. I want it in your hands for the morning trade. If you're a Spider ETF trader, this goes hand in hand with that afternoon Spider ETF that I put out at 4 or 5 o'clock in the afternoon. I cover about 40 charts with specific buy here, sell there, do this with the market. You don't have to do it. It's what I'm seeing in the market, and the idea is you might have your own idea, and that's what I pray. I pray you're coming to it with your own idea, and you're looking at markets, and you might want to say, like I used to, I want to know what ABC guy thinks of the market. You think I still don't subscribe to services? You're wrong. There are certain people I want to know what they're saying. I like what they're saying. I think they're smart. Maybe they're a thing. I'm going, does that make sense? Let's see what they're doing. Why not? Don't live in a vacuum. You want to get out of that. So I just want to be one of those guys that you turn to. I make this inexpensive. $7.95 for a trial. It supports what you're watching here for free. I get a lot of people, do all this, do that. I notice the people that ask me to do that are rarely paid subscribers. It just makes you laugh. After that, $15 for every 30 days. And I do offer a new combo package for the SPDR ETF. So if you go to our website under the word research and go here to the morning subscriber video, you'll see the combo package right with it in the pricing area. I do the same in the SPDR, and that's taken off. A lot of people are starting now to buy those. In any case, I'm Ira. You have yourself a great weekend. I'll see everybody come Monday. Take care.